the correct term to give the market right now, given the kind of cuts we're seeing? Do you believe this level of panic is warranted in the market right now, given everything that's been happening in AI, or do you, in IT stocks, I mean, or do you believe this is an overreaction at the moment?
No, I'm in the camp who believes that the sell-off in IT names is clearly overdone. The belief that AI is going to take over enterprise in the next 3 years is, not possible, according to me. There's going to, because AI needs context. Edge cases needs modernization. I mean, all these things will only increase the scope of IT services. Given that Indian IT is broadly around IT services, I think they will wrap around the IT AI use cases very well. So clearly, we are in pre-COVID valuations with a better payout, and so I would believe that it's a clearly a buy on dips in the IT name.
What's the market missing, Manish? Hi, very good morning, and it's always great chatting with you. What's the market missing? Because is this overreaction just part of bad behavior? How would you kind of rationalize this?
No, so markets are a voting machine in the short term and basically a weighing machine in the long term, as has been said by Warren Buffett. And clearly, here the jury is out whether AI is going to gobble up the entire world. And that is where the presumption of the entire globe is currently, that exit P multiples, terminal growth rates are getting reset. I'll take you back 3 4 years when there was a whole narrative around EV vehicles eating up ICE vehicles. And at that point in time, anything to do with fossil fuels was getting pummeled on the pretext that the terminal value is going to be zero. Neither of that happened, and stocks catering to the ICE space, OEs or auto components, etc., have all rallied 3 4x. Similarly, out here, I think there'll be a middle path. AI can't exist by themselves. They will need the IT services per se. And similarly, like in the previous assumption, this time around also, you are going to see that this was a missed opportunity to buy. And as has been articulated by our commerce minister also till yesterday, that Indian IT services are going to be relevant. So I would believe it's more of a knee-jerk reaction to whatever is happening around the globe. And there is where the opportunity is. But clearly, the markets believe that terminal growth rates are going to be reduced and exit P multiple should be halved from what they were trading previously.
Okay, Manish, just trying to understand within the IT space right now, given that we have seen so many cuts, opportunities to buy, if at all, and yes, where within IT?
So, if possible, buy IT product companies, not services that you have to make an effort to get repeat business. So product businesses are more sticky, provided they don't get disrupted by AI themselves. That is one. Or within the IT services space, look out for mid and small cap companies where they have better nimbleness to move towards IT, towards AI, as opposed to the large names where you have a big workforce. Many of them would get redundant, and obviously time and material business model is changing in favor of outcome based pricing. So to reskill or to let go such a large workforce is going to be difficult in India's context. So I think out here within this IT space, the mid and small IT companies which are catering and using AI to enhance their business model, or the product companies.
Very interesting, Manish. Manish, there's plenty that's happened, and we haven't had a chance to catch up with you post budget, post India EU, post India US, and markets have reacted majorly positively. It's just the IT pack which is beaten, but outside of that, when you're looking at it over the last month or two, we've done fairly well for ourselves. But this most recent kind of last couple of days of knee-jerk reaction, what's the kind of best play at this point within Indian markets, because it presents an opportunity overall as well?
So when services are getting disrupted, I think the outperforming sectors are going to be uh, so what called the halo companies. And what are these halo companies? Are basically asset heavy or heavy asset and low obsolescence in the IT changing, AI changing world. So services are getting disrupted. Each of the functional areas of businesses catering to the services side are getting disrupted. So IT software is getting disrupted. We heard fintech is getting disrupted. We heard logistics is getting disrupted. But the guys who are going to make the infra build for the AI, they are likely to outperform. So, in other words, what we believed as commoditized sectors in yesteryears, which are very much required for building the AI infra globally, are going to be in the limelight and likely to outperform. Now, the rationale behind this is that we use GPUs to have the proof of concept whether AI would be working or not. Now is the second phase when the AI infra build up, because the proof of concept has been proved, NVIDIA, etc., are selling chips like hotcakes. So proof of concept has been there. Now it is the AI infra built globally that's going to be in limelight, and there is going to be increased demand for chips, RAMs, and networking, and critical minerals and energy. These are some of the areas which are likely to outperform. These sectors and themes were nowhere in the limelight in the last 1 year or so. And so there is not a case of overvaluation, there is not a case of over ownership, and obviously earnings growth and PE re-rating is likely par the course. I would believe these are the spaces to be in currently.
Okay, Manish, it's always great taking context from you because you zoom out so easily. And while all the noise plays out, it's great getting that perspective zoomed out, and you always give that. So thank you so much for coming in and speaking
Thank
with
you.
us on a day like this,
Thank
second straight day where IT is falling 4% plus, in fact. And therefore, what Manish seems to be saying is it's a big opportunity. With that,